Hi all, it's 6th October 2021 today. I'm going to touch on my quick thoughts of Beyond Meat. Is it redefining meat? Is this an ESG team? Before I proceed, appreciate a like for this video and do subscribe to my YouTube channel if you find value in my video analysis of various stocks and broad market review. What's Beyond Meat? Yes, IPO in 2019 at an IPO price of 25 US dollar. Since then, this plant alternative meat is in a very phenomenal jump with a price jump of 25 USD all the way up to 212 US dollar price performance. But right now, $100 share price is already a receipt of around 50% from its all-time peak. Being an ESG team, this company definitely will be on the investors' radar. The question is, given the initial outlift in US sales numbers since IPO, the question is where will be the next significant sales number jump for Beyond Meat? Current sales figure of around 140 million USD per quarter isn't that sexy given current market capitalization of 6.3 billion US dollar, and it's not that cheap. Put one thing here on perspective is that ESG team is definitely going to catch investors' attention. Redefining meat, redefining health. Can this save the world as well? You reduce the carbon dioxide emission. People really like this because of the global warming situation and climate worries. People will definitely like a company that is socially responsible in terms of improving health, because it's been proven that eating such alternative meat can help to reduce risk of developing heart failure. And R&D will and definitely remain a core engine for growth for Beyond Meat. You see that as a percentage of net revenue, Beyond Meat is 7.8% of its net revenue devoting into R&D. But for other companies like Kellogg, the WH Group, well, R&D on such alternative meat development isn't that big. But of course, given their size being bigger than that of Beyond Meat, we also have to assess whether R&D spending at Beyond Meat is still on par with Kellogg, Nestle, because these are very big companies. They have been pushing out a lot of retail sales outlets and food service and international retail figure. Will this lead to higher costs, leading to higher fixed costs and leading to higher operating expenses? So I need to bring your attention to gross margin and net income margin in the next few slides. If you actually take a look in terms of the price performance relative to that of Russell 2000 ETF, Beyond Meat has performed well in the initial days since IPO all the way to 2021 beginning of the year. But on comparison, you actually look at the current price level now for the last 1 year, there's a dislodge in terms of price performance to that of Russell 2000, which is still holding around 2200. But Beyond Meat has came down since then. So you'll see that Beyond Meat on a 1 year price chart performance is actually down close to 40%, whereas Russell 2000 is still up 40% since October 2020. On a 2 year price assessment basis, Beyond Meat is down 30%, whereas Russell 2000 is up around 47%, holding around there. So you see that Russell 2000 has been pretty stagnant for 1 to 2 years for now, but for Beyond Meat, it's not doing well. On a longer price duration basis, it's doing slightly better at negative 30% compared to its negative 40% on a 1 year chart. But what should we do now? I think it may be more wise to actually wait until the 3Q earnings result, because it seems not to perform too well after the earnings result for the last few quarters. And competition does seem fierce in US. You look at the top left corner where I mentioned about US retail. US retail in 2021 year to date is only $141 million compared to 2020 year to date 140. It's only up 1 million. So it's trying to find growth in terms of US food service and international markets, and all this requires sales costs and marketing costs in a way. The saving grace right here is lower direct material costs led to an improvement in gross margin, which is around 31% compared to Q2 2020, which is around 30%. But what if direct material cost goes up as well? That would be worrying. So we see that the loss from operations in 2Q 2021 is negative 19 million, whereas 2Q 2020 is negative 8 million. Growing sales figure from 130 million to 150 million did not improve its bottom line, meaning that net profit margin is compromised. The slowing in terms of retail sales figure is definitely worrying. So you look at the price chart just for Beyond Meat alone, the price trend doesn't look nice with so many price peak coming down, price peak coming down, price peak coming down, forming lower lows, lower high. So if it doesn't hold the $100 mark right now, it may even break down to 80 USD pretty rapidly. And 3Q 2021 results will be a very determining factor. So do we want to rush in now to buy Beyond Meat? I think there's no need to rush. It's best for me to sit on the sideline and see whether can you find support at 100 USD. If not, just watch out for the 80 USD mark. You see that I've been mentioning that US retail sales figure is slowing. You see the last 4 weeks with the data as of 13 June 2021, they're minus 55 basis points in terms of sales market share growth. My thoughts, this is a sector that definitely global investors would like. Pricing wise isn't that cheap. Slowing sales from US retail is worrying, and they are going to spend more on marketing costs and international logistic expenses to push the sales out to global markets. But this has yet to prove improvement in bottom line. 2Q 2021 is a demonstration of yet to be proven sales strategy, and best for me to stay out and sit on the sideline and to only revisit after the 3Q 2021 results. The saving grace is it had $1 billion US, and the cash burn right now around 120 million per quarter, per 2 months. I mean for the first half of 2021. So the 1 billion cash holding can still last for quite a period. My proposed action plan, like what I've been mentioned to myself, wait till 3Q 2021 results. Right now, the best strategy to test on Beyond Meat for me is sit on the sideline, sit up. As always, this should not be construed as any investment or trading advice. Thank you.